This is a buy signal, as indicated in this indicator. If we would have simply followed the signal and take a long position here, we would have secured a nice profit. How about this? This is a sell signal. If we would have opened a short position straight away, we would have secured another great signal. Well, even without any other confirmation indicator, this tool is quite impressive. In this video, we will have a closer look what this tool is about and how we can optimize an already great tool with other indicator to improve the quality even more. If you find value in this video, leave a like and subscribe to boost the YouTube algorithm. If you want to work with this indicator, go to TradingView and open any chart on any time frame that you like. I will show you the 1-hour time frame for the euro, US dollar. Go to the indicator section and search for two-pole oscillator by Big Beluga. By the description, the two-pole oscillator is a refined momentum and trend strength indicator that enhances traditional oscillators by smoothing out price deviations using a two-pole filter. In simple words, it gives us clean signals that we can easily follow with buy and sell signals. This indicator has several components. First, we look into the lower indicator, double-click on it, and activate the very last plot as well. This will show us a second very thin line, also named as the signal line. It will give us pretty simple buy and sell signals. If the lines are crossing each other in an upward momentum, it will give us a green buy signal. This signal is shown in the lower section as well as in the chart section. Next to each buy signal, there is a dotted line, which is known as the invalidation level. This level appears next to each buy signal and are very important. These lines can be used as stop-loss lines. So when we open a long position, we can put our stop-loss right on or below this line, and we will have a pretty decent trading setup. Whenever an invalidation level is touched by the price, an X label appears to show that the invalidation level has been triggered, and so the market has moved against our position. Here is the description how the indicator works. The oscillator calculates price deviations from a mean value and then applies a two-pole filtering to smooth out the signal. Two-pole filtering is a way to reduce noise, while at the same time preserving important trends, effectively applying two layers of smoothing to produce a cleaner signal. Once the signals are generated, they are colored to show whether they're bullish or bearish. Bullish signals appear in blue, indicating bullish momentum, and purple signals appear when momentum is bearish. If we go back to the settings of the indicator and then head straight to the style, we can disable the last plot option. And then on the Inputs tab, we have the filter length, which controls how much smoothing is applied to the oscillator. A higher filter results in smoother signals, reducing short-term noise, but it may introduce more lag. Conversely, a lower filter length makes the oscillator more responsive to price movements, but it may also produce more false signals due to increased sensitivity. Adjusting this setting allows traders to customize the balance between smoothness and responsiveness, depending on their trading style and market conditions. And then down here, we're going to toggle the levels on or off, which will hide or show these invalidation levels. I'm going to use the default settings, but you can use the settings you like. Once you are happy with the signals, click OK, and you are done with the setup. Let's have a look how we use the signal by identifying overbought and oversold conditions on the chart. Looking at the indicator, we have a midpoint located at the 0 point on the indicator scale. Additional levels at the plus 0.5 and the minus 0.5 levels, and then we have extreme levels at the plus 1 and the minus 1 levels on the indicator scale. Our market is considered overbought if the oscillator goes above the 0.5 level. It can also be considered extremely overbought if the market goes above the plus 1 level, which offers higher probability of a pullback. Likewise, the market is oversold when the oscillator goes below the minus 0.5 level, and it's considered extremely oversold if it goes below the minus 1 level. For the strategy I'm going to be showcasing here, we need to add the Volumatic Variable Index Indicator by Big Beluga. Once you've added it, you want to double-click on it and then change the VIDYA length to 34. Go to the Style tab and then disable the Lines option and then click OK. This indicator is used to identify bullish and bearish trends in the market. A bullish trend is identified by a green trend ribbon, like this. Conversely, bearish trend is identified by a red trend ribbon like this. It also measures the trend's strength using the delta volume, where a trend is considered strong enough if the delta volume is at least 20%. For example, to take a long trade, you basically want to have a buy signal printed within a strong bullish trend. Here you can see we have this dot, which represents a buy signal. This buy signal is only valid if it's printed under the 0.5 level. This gray line, if it's anywhere above that line, the entry would become invalid. Condition number 2. At the time the signal is printed, we need the VIDYA indicator to be colored green to indicate that the trend is bullish. We also check the delta volume. This should be at least 20% or above to confirm a strong trend. Right now, we can see it's well above the 20%, which means this trend is strong enough to push the price higher and higher. Also keep in mind that the indicator is delayed by 2 candles. So for our back testing, we don't open a position right on the indicator. Instead, we take to opening 2 candles later to start our position. When we enter our position, the stop loss is going to go right under the invalidation level, which is actually this dotted line right here. The take profit is going to be set at 1.5 times the risk. Let the trade run, and as we can see, it was profitable. Now here is another long position. As you can see, we had a buy signal, and it was valid because it was printed under the 0.5 level, the dotted gray line. Looking at the VIDYA indicator, it was green, indicating a bullish trend. At the same time, the delta volume was above 20%, confirming that the trend was strong enough to push the price higher and higher. We take a long position plus the stop loss below the invalidation level, and you're going to aim for a take profit of 1.5 times the risk. Letting the trade run, and it was profitable now for a short position, it's going to be the opposite condition. Number 1 is to have a sell signal printed by the 2-pole oscillator. Here the sell signal was valid because it was printed above the 0.5 level. The gray horizontal line looking at the video indicator, it was actually red, confirming that the trend was bearish. The delta volume was well below the negative 20 threshold, indicating a strong enough bearish trend. We take a short position, plays All-Star Plus, above the invalidation level, set the take profit at 1.5 times the risk, letting the trade run, and it was profitable. This is the 2-pole oscillator that can generate you a high profitable trading income. If you are interested in VIP trading signals, have a look in the video description and check out the link. For only $9, you can get 1 month of high-quality trading signals. See you in the next video. Cheers.